Good day, everyone. Ali Safi here from Safi Financial Network. Today is September 2nd, 2024. In this video, I just want to focus on S&P 500 and overall indexes. And I'm going to show you some of the other charts as well to see where are we at for the stock market. Is it good time for investing or is it good time just take out some profits and potentially you're heading to some rainy days. So if you're investor, make sure watch this video because I would say like 70% of the materials that I'm covering in this video, it's all about you. If you are traders, for sure you need to watch it because this is gonna be a good trading setup potentially coming in the next few weeks. So you want to be prepared for this setup as well. So before getting to the charts, I'm going to cover S&P 500 and Nasdaq charts at the end of this video. But before getting to the charts, I'm going to show you some interesting charts that they are just talking about the macro economy or macro picture of the stock market. So this is yield curve chart, which is U.S. Bond yield 10 years minus 2 years bond yield. And as you see here, we just went all the way down. Uh, we call it as like inversion. We are getting below zero, which is calling inverted yield curve. And if you haven't watched my previous video about the title is Recession is Coming, make sure watch that one because I covered a lot in that video, but briefly, I'm going to talk about this. Whenever we are getting uninverted, now this is very, very scary signal, or I should say, warning signal for all traders and investors, because you you better not to be in long position when this is getting uninverted. So we don't know exactly when recession is coming, but previous times when this happens, recession came up between 4 to 5 months, even 6 months after this. So this is, for example, 2007. 5 months after, when we got an inversion, this is a red line. So we got recession. We got market top and recession. So this is a COVID crash in 2019, September. We got kind of like an inverted and uninverted, very, very like a sharp decline to below zero and then bounce back up very sharply. Almost, I should say, 5 months or 6 months later, we got into uh, recession. So this is very, very important when we see this chart. If I want to show you here S&P 500, for example, so this is a chart for S&P 500, and this is let me just change the color here because color is not that good, but you can see that. So this chart is, let me just bring it here. So this is S&P 500 chart, and you're just getting here to this area, which is a top of the S&P 500, while this is an inverted place here, and also an inverted place here as well. Then we got market top here, right here. So this is very important, folks, when we are getting to different scenarios for the market. We should just be careful because S&P 500 right now is pretty close to new all-time high. But look at that. So when this pattern is forms to the upside, let me just see that. When this pattern forms to the upside, an inversion is coming down the road. And the higher it goes, the probability of recession is getting higher as well. So be careful about this one. So this is kind of like the warning sign that we got it here. The next chart that I want to show you is market breadth. So this is a market breadth. And whenever we get into this area, which is 88 to 90, 96 level, this is kind of like the dangerous zone. So let me show you again here. When we get to this area, which is 84 to 96, we are getting into recessionary. So this is a market top in 2021 and also COVID crash. So this is a COVID crash just on the left side of the chart. So you see that even we didn't get close to 84, 86. So it was kind of like a sharp sell-off after that when we got to this area. Right now we are consolidating here. So there is a potential. We're gonna spike up all the way up to potentially to 86 to 87, even 90. And then when market breadth is getting there, this means everything is getting very expensive and the value is not there yet, folks. So if you want to be invested in the market at this level, you should be careful because right now we are getting in a very, very interesting signal that a bond yield is getting to the downside, yield curve is getting uninverted, and also market breadth is at the toppest level, almost actually one of the most toppest level since COVID crash. So we are just getting there as well to very, very high value with lots of different names. The next one is PCC, which is put call ratio. So whenever we get into the lowest level of the put options in the market, usually that is market top. And this is the level that's very important, which is 0.60 to 0.75. And last week, we just closed below 0.75. So if you just look at this here, there are several times that we got it there, but every single time we got into a big correction or kind of like a recession. So right now we are here. This is a market top in 2022. And this is a market top in January 2022. And even if you want to get before that one, so I want to show you. So this is a market top in January 2002. And this is a COVID crash. So you know that June of that year, we got one of the most sharpest signal to the downside as well. So this is kind of like interesting as well. And also 2021 in January, we got kind of like a negative sentiment for the market as well. So every single time when we got there, this is very, very interesting. This is very contrary, and everyone needs to be, I should say, careful about it because right now we close below this level, below this 75, and this means put options are very, very lower than call options, and this is very contrary indicator. This means everyone is just piling on the call option and everyone is betting on more bullish momentum, which can come actually for the next few weeks. Or I should say, I'm going to just later on, I'm going to tell you exactly what I expect from market and when market is getting to the top information as well. All right. The next chart that I want to show you is RSP, which is S&P 500 equal weight ETF. And this is very, very interesting just because this chart as well shows that we are kind of like at a very parabolic move to the upside. So whenever we get to this stage, RSP is hitting new all-time high, while S&P 500 didn't get to new all-time high. This is very interesting. This means money is flowing actually to different variety of the stocks, which is a healthy and which is very bullish. But this means at the same time, money is coming out from Max 7. So Max 7 stocks actually usually drive the market higher. Right now, Max 7 is lagging. Why lagging? Because if you look at the SMH, which is semiconductor index, if you look at Nasdaq chart, we are still have a distance from the new all-time high, right? So even for the all-time high, we are having distance. But right now, RSP is getting to all-time high, which means market is just flowing to some defensive names and also some other names that are beaten up recently. But this is for the short term, this is a good, actually healthy indicator for the market. We can give a bullish sentiment that money is diversing to different names. But at the same time, when it goes parabolic move to the upside, we should be concerned because this is kind of like the last bullet of the market that money is coming from good quality names to kind of like a zombie names to Russell 2000 and those ones. And when those bubbles actually are getting burst, then we can see some kind of like a sharp sell-off in everything. Everything is going to go down. All right, so let's get to the chart of S&P 500. So this is S&P 500 daily chart. And as you see here, we got kind of like a very nice consolidation. So this is bullish for the short term. And I believe that we are gonna get a bullish sentiment for the market for the next week or two. I should say everyone, all traders, investors, needs to be very, very careful because we are getting to a multi-month top for the market. And when I'm talking multi-month top, we are not going to hit there for a short term. And we are going to hit there for short term, but we are not going to stay there for the long term. We are going to go down for, I should say, multi-months, and we are not going to catch this new all-time high again. So this means the multi-months topping formation is coming for S&P 500, and the timing is second half of December. So we have 15 days, which is 2 weeks, and these 2 weeks potentially market is shifting higher to the top to the upside and forming the topping formation. But after that, if we see a reversal point at this level, which is a 57.23 to 58.50, 58.55, so this level, if we get there and see the reversal, I think that's the top for the market as well. For Nasdaq, if we get, let me just bring the chart here for Nasdaq, we got a good kind of like a buy signal, I should say, short buying opportunity for Nasdaq is coming, especially for semiconductors as well. But this is kind of like a last bullet, I should say, for Nasdaq. There are different levels that I'm looking at. The first one is we can get to 20,000 to 20,400. So this is the first level. Even we can push higher for a nominal new all-time high, which is going to be 20,600 to 20,900, barely 21,000, let's say. So if we get there, I should say everyone needs to be careful, especially for second half of September. So if price and timing comes at the same time, we are hitting multi-topping formation for the weekly chart and also monthly chart. And that would be kind of like a very concerning signal, especially when we just combine these two with the charts that I show you at the beginning of this video. I would be very concerned. So September could be a very good month if you are prepared for the downside move and if you are reloading on a put position and unloading some of your long position, if you ask me, especially for the second half of September. However, I'm saying this is not a forecast and this is not advice. This is just all for educational purpose that I'm just telling you at this video. And this is the way that I'm just sharing my knowledge for this. But if we get there, I should say everyone needs to be careful. All right, folks? All right. I believe I covered everything. If you like this video, please smash the like button, subscribe to our channel, and make sure to watch the next videos coming every day in this channel. Have a great weekend. See you on the chart. Bye-bye.